Welcome, guys. Welcome to the Savvy Investor YouTube channel. Great to see everybody jumping back on again. I just want to thank you guys all for joining us. For those that don't know me and are brand spanking new to our Savvy Investor channel, my name is Mike Ponte. I am the founder of Savvy Investor and longtime Canadian real estate investor. So great to have everybody here. And again, welcome again to our live session as we are kind of wrapping up the day 4. We're on day 4 of our capital raising series. And today's discussion is a real important one because we've pulled everything together over the last 3 days. And we're going to get into some of the details of how best to manage your money partner relationship to make this successful. It's about creating that kind of win-win relationship, which is so very important, not just for the short term, but for the longevity of your actual capital raise venture together. Okay. And you're going to see a lot of stuff on social media and in books and all sorts of different things on how to joint venture and how a joint venture partnership works. But you know what? There's not a lot that talks about what happens after acquiring the property. And that's kind of really what today's presentation is all about. It's really about all the work and energy that you've put into this up to this point in regards to screening your partner, finding your partner, how to properly present to your potential partner as well, and having them build trust and confidence in you. And then they've actually acquired the property with you. And they're just like, okay, you know what? Everything's great. Love it. What do we do now? The property's been acquired. What are those things that we need to do as a money partner and also a real estate expert as well? Okay, so just be aware of that. Okay, so with that being said, and I've talked about this before over the last few days, there's a lot to kind of go over and come off. And we have kind of done a good reference of some of the things that we need to do. And we've had to break this up in 4 segments. And so for those of you that are playing a little bit of catch up and haven't watched the entire series, highly recommend you guys going to step number 1 or day number 1 and just kind of follow it along, because we try to create it as more of a step-by-step process for everybody to kind of help assist our savvy investors to learn this a little bit better. Okay, so with that being said, that is what today's session is. So make sure, if you haven't had the opportunity, just follow up, take a look at some of our YouTube videos as well from our series. And again, please engage in our sessions as well. I can see everybody's comments. Hi, Cheryl. It's great to see you again. Been following the whole time. That's wonderful, Cheryl. And so with that being said, please ask questions, share comments. Don't be afraid. I do like to make this interactive. And more importantly, just make sure I get your questions answered. And for those that are jumping on live and maybe relatively new, if you haven't had the opportunities, please do me a small little favor. And I've been asking every single day. It's kind of like a little bit of a broken record, but again, it's just part of the process. Please subscribe to our YouTube channel below. Really appreciate your guys' constant support. You know, at the end of the day, it's one of my objectives is to help grow this channel with providing good quality information to help support our savvy investors so they can be successful in their journey. Okay, so with that being said, let's get to the topic at hand here. And let me just pull up my wonderful presentation here. So bear with me as I just kind of set this up a little bit better. There we go. So some of the things I want to kind of highlight for today's session is these are some of the things that we've kind of talked about over the last few days. So if you've missed it, these are the last 3-day sessions. We've talked about how a joint venture partnership works, what are the pros and cons. So that was on Sunday. How to find and present to potential joint venture partners. Pretty important. You know, how am I going to present myself? How do we sell ourselves appropriately? And making sure that there's compatibility. We talk about it's like a marriage that you may be working with these people for the next 3, 4, 5, 10, 20 years. And that's really the intent. How do we structure your joint venture partnership? So we talked about how do we split the profits and all of those things that come along with this, and what's the best way to do that and overcome some of those obstacles and objections that tend to come from money partners about a 50-50 split. It's about bringing each other's resources together and coming together for a successful partnership, successful venture where everybody wins together. And that's kind of where today's session is all about. Is we've gone through a lot of these things, is how do we kind of manage this after the fact? How do we create this successful win-win relationship? And so, like I said, this is kind of the after effects of after the acquisition. So how do we want to manage this accordingly to make sure that we have a happy partner, a good relationship with our partner, and more importantly, hopefully we have a money partner for years, if not decades to come. And so that's what kind of today's session is. Okay. Now, before I kind of start anything, and I've had to do this in every session, it's just really more the legalities of this, and I have to put a disclaimer that's in place. So with that, sorry, bear with me. There we go. So a little legal disclaimer that I have to kind of communicate is that, before you guys go in and raise capital, or you are looking to structure a joint venture partnership, I highly, highly recommend you guys getting legal advice before doing so. Again, the content that's been shared with you guys today is really based on guidelines of things that I have done in my past and still do today. But again, it is no substitute to any legal advice, because it's really important to understand what your current situation is, because everything tends to vary slightly. So make sure you get some legal advice. So for the money partners or they're on the line or watching the recording, make sure you get legal advice. Real estate experts do exactly the same thing. And then, like I said, it can be a very good, harmonious relationship for everybody that's involved. Okay, so with that being said, and get the legalese out of the way, let's get right to the topic at hand. So like I said before, we've kind of gone through a lot of different steps up to this point. And, you've gone out, found the right partner, or you've communicated the right partner. You've piqued their interest at possibly a barbecue or at an event, and they've wanted to connect with you. We've talked about kind of more of a systematic approach of how you present. It isn't about you, and it's not about your deal. It's about, can your money partner have confidence and trust in you? And that's actually what you're selling. From that point forward, you've presented accordingly. They felt very comfortable with you. And in addition to that, they really respect your investment strategy and structure and what you're trying to accomplish. So based on either a 50-50 split or whatever arrangement that you have, at this point in time, they're all feeling good. They're all feeling confident in you. They trust you, and now they're wanting to proceed. So you go out there and you go out and buy a property, and you've worked together, and it's all working out in a harmonious relationship. And fist pump, congratulations, you've now done it. You are now married, technically. Not really, but you're kind of like married in this relationship together, where you guys are working well together. So now it's time to put the R into the ROI. And you guys have all worked very, very closely together to ensure that this partnership's going to work. You have common goals that you've committed to. And then the other aspect is that you have both committed to each other. As a money partner, you've committed to your real estate expert in regards to the capital you're going to provide and qualify for the mortgage and all of that stuff. And then from the real estate expert, the responsibility is now on you to follow through on those commitments that you have said you were going to review, you were going to do. So you've built trust, they've built trust in you, and they have confidence in you. Now it's time to kind of execute, if you know what I'm saying. Okay. So with that being said, now it's time to kind of get to work. All of this stuff that we started at the very beginning is kind of the fun stuff. It's the acquisition side, secured the deal. Now it's actually time to get doing the work to accomplish the goals that you've set out for yourself. Okay. So with that being said, the first thing that you're needing to do is to kind of follow these particular steps to make sure that these are very crystal clear. So with that being said, making sure before you guys are going into this is that there is, you've gone in, there's a clear clarity to the acquisition, refinance, and exit strategy. So do we have clarity to that amongst all parties? Okay, so these are the steps that we're kind of following along. Now, the joint venture structure, is it accepted? Okay, make sure that it is accepted and agreed to. And there's a document called a letter of intent. There's many different versions of this, but at the end of the day, a letter of intent is needing to be signed. You can get your lawyer to draft one up for you. And there's probably a few templates on the website, but my recommendation, or not on the website, but my recommendation is talk to your lawyer to get yourself a copy of a letter of intent. But that is something that should be signed in advance of you actually going to acquire the property. So there's no confusion in the structure the structure of the investment. So is it 50-50? Is it 65-30? Everybody should be on the same page before you guys go in. And that's where the letter of intent kind of comes in. Once that's done, You will then once you've got a property under contract and you're about to close on the property, my recommendation is making sure that everybody understands the more formalized version of a joint venture agreement. So you will need to review this with your partner, and it covers off all kind of horrible and negative and positive situations that kind of come along with this. What happens if one of the partners passes away? What's the situation there? What happens if there's a disagreement? What happens there? What happens is if one of the partners wants to leave a little bit early. That is what the joint venture agreement is needing to be prepared for. And so what you have to do, again, this is where you get your lawyer involved to making sure all of the things that you guys are looking to do and agree to are followed through in the contract. Okay. With that being said, you do, as a money partner, you're going to have to provide kind of a budget. What's the budget? If you're doing renovations or repairs, you're doing it as a burr or a flip or long time hold, you're going to need to lay this out through a budget or even a pro forma outlining what the plan is to attack this deal and make this thing profitable. So again, these are some of the key things that need to be done. These are the step-by-step things that need to be very, very clear amongst both parties before you actually close on this property. So make sure this stuff is buttoned down, organized. So for you real estate experts, if you don't have some of these documents or tools, this is something you're going to need to do. It's all fine and dandy when you come to raising money and you have success in raising cash to do your transaction. Do you have the right documentation, and are you following it through based on these particular steps? Never assume. Again, assume makes an ass out of you and me, so you don't want to do that. Never assume the other side understands exactly what the rules are in regards to what the 50-50 split is or anything. You want to make sure crystal clear, sign through a letter of intent, and then secondly, follow it up with a joint venture agreement so everybody understands the rules of engagement when it comes to this acquisition. Okay. So with that being said, the next step that you're going to be kind of looking at is after we've acquired the property. Once the transaction's been completed, what are some of the duties that need to happen to actually go out and manage this for the long term? So here we go, guys. The real estate experts, this is truly your time to shine, okay? So the real estate expert, this is your time to shine, okay? So for you guys have made a lot of commitments. Your money partner has come to the stage and provided you with the capital to go and execute this thing. This is now your time to really follow through to the commitments that you have laid out. And again, you've sold them on, and you've built that trusting relationship based on your knowledge, your skill set, and more importantly, they have the confidence in you. And that's what you have sold up to this point. And so that's one of the things that you really all need to understand is this is the time where you need to start to execute. So ensuring everything is organized, buttoned down, set up. So for example, if you've hired property managers or they're going out to screen tenants right now, or have they started advertising? What about the lawyers in regards to signing documentation? Is everything kind of covered off at this point in time? So it's following through in all of those things. So again, it's working that plan that you have developed and envisioned, and you've also shared with your real estate or with your money partner, and you're following it through closely, okay? In addition to this, as a real estate expert, you are responsible for kind of monitoring what's going on. You know, the financials of the property. Is the property performing as you were hoping it was going to do? Again, look at what happened today. And I know there's a huge announcement that happened with a 1% increase in from the Bank of Canada. It's huge, right? And so with that being said, how is that impacting your financials? Okay. So are you paying close attention to that? How are your renovation budgets going versus what you were initially versus actuals? What about the rent rates? Are they exactly or higher or lower than what you're anticipating? These are some of the things that you need to be monitoring on behalf of the relationship. You've built together this pro forma, this budget. It's execution time, and now you're just needing to follow the plan that you have laid out, that that your money partner has accepted and ready to position with, and that's it. Okay, really crystal clear. This is, again, your time to shine. these are the things that you need to follow through with. Okay. And again, be very, very clear. This is a business, folks. It really, really is. And again, you've got investor capital, investor money that you are using. Treat it with a lot of respect, because again, these guys entrusted their money with you, and you definitely need to treat this as a business. I like to treat my joint venture money even more importantly than mine. I take a lot of pride in regards to ensuring that our capital is secured and our money partner's capital is secured. It's because we want it to make sure that we can repurpose that maybe down the road, but it's only based on the success of the things that we've done up to this point. Okay. So know everything about your business. Okay. The money partner is expecting this. So for example, when we talk about financials, market analysis, even things that are happening within the markets literally across this country right now, we're seeing prices drop, going up in some places. Are you monitoring that? I know even for myself, there's been times where I've had to acquired some properties. We had a plan for 5 years. The market kind of changed, and I was staying very close to the market. And with that being said, we had to kind of pivot. We actually had to sell a couple of our properties because there was too much risk in regards to the profits that we made, and it was the right decision. But if I wasn't paying attention to that, it was going to cause a lot of problem. So I want to be very, very clear, guys. Just make sure, for you real estate experts, very, very important that you are monitoring this, because your money partner is expecting that you are managing this appropriately. Okay. So be very, very clear with this. Now, the other part is communication. And this is one of the most important things about managing your relationship with your money partner. Okay. Communication is just so key. Okay. It is important to have confidence. You've built this confidence and this trust with your money partner, and you as the real estate expert need to continue to build on that trust so they can still have the confidence in you. And so some of the things that you need to do is have that regular communication. So how should you do it? When should you do it? How often? So again, this is something that you guys should be talking about with your money partner in advance, and ask them, how often would you like me to engage and talk with you? And there's lots of ways to do this. You can do it through emails, obviously newsletters, phone, WhatsApp chats, texting, all that kind of stuff. You can do a blast text or blast WhatsApp, and just providing people information about what's going on in the markets. Obviously, in the markets, the property itself. With the announcement today with Bank of Canada, I'm expecting a lot of real estate experts are reaching out to their money partners today, because they're thinking about what's going on. This announcement's been made, and your money partner is like, wow, I wonder how this is going to impact me. And the first place is probably going to be in their personal residence and home equity lines of credit. And then they're going to be like, wait a minute, I wonder what's going to happen with my investment property. So instead of them guessing, be a little bit more proactive and being able to communicate accordingly about, hey, this is what's happening, and we're in either good position or bad position, but we do need to have some of that dialogue. And that's really, really important. So get ahead of it, discuss the positivity and the negativity that can possibly happen, because you know what? You guys are partners in this arrangement. So you make sure you're communicating that appropriately, so you guys are all on the same page on what the next steps and the strategy is. Right now, again, there's this big announcement that's made. People that own a lot of investment properties possibly out there. Some people are going to be struggling more than others. The worst thing you can do is kind of close your ears. The important part is you need to be proactive in your approach, and that is absolutely true when you're dealing with money partners, for sure. Okay. In addition to that, what is your agreement with financial reviews? How often are you going to do this? And here's my advice, and here's my recommendation. When you've got a brand spanking new relationship, or you're even new in this business, in raising capital, I highly recommend you actually meeting up with your partners every quarter. This way you're getting practice, you are keeping yourself organized, and more importantly, you're building that bond, you're building that relationship with your partner. Now, for others that have maybe been doing this for a while and they start to scale, and this is also for people that are just getting started, at some point in time, you may not be able to physically meet with them on a quarterly basis. So, again, do it as a virtual basis, on a quarterly basis, semi-annual, and I've also seen people do it on an annual basis. So those options are available. The less frequent, then the more less frequent, touch points that you have with your money partner is obviously easier for you as a real estate expert in regards to management and work. But again, you're building confidence. And my recommendation, especially when you're just getting started, reach out on a quarterly basis, connect with them, share the goods, the bads, the uglies that come along with it. And it's really, really important. With those quarterly reviews and those financial reviews that you do with your partner, do your cash flow payments at the end. Provide them kind of a financial statement. How are things looking with the property? Are we generating cash flow? Are we not? What's going on? And if we are, it's always wonderful to have a check and you're giving it to them. And there's a good feeling that comes along with that as well. Okay. Those quarterly reviews are instrumental, especially when you're getting started. And the reason why I say that is because when you're meeting with them quarterly, you're cutting a check and there's a smile on their face and there's a smile on your face. One of the comments that I tend to hear all the time is like, great, Mike, thanks for the check. What other opportunities do you have? And all of a sudden, that one partner can do multiple different projects with you, which is exactly what you want. If you can have one partner doing multiple projects, how great would that be? And that's the key. Now, here's another little tip. And this is a real important one. And this can be really challenging for people that are getting started. It's sharing kind of the goods, the bads, the uglies. I said this earlier. But you know what? You do need to be professional, very clear on your investment update. And sometimes you're not going to share really great news. And I'll get to that in a second. But sometimes you have to. And that's where you do it personally, have that dialogue and be able to engage. And like I said, here's another opportunity when you are meeting with them on a quarterly basis, which I highly recommend. You might have another opportunity. They've already invested in one of your projects. When you bring another opportunity in front of them and they're happy, there's a very good chance that they will want to repeat again and be another investor in one of your projects. And I know for myself, even for my partners, I don't have one partner that's only bought one properties. They've all done multiple transactions. Take that advice. It works very, very well. You do need to be organized and buttoned down. Communication is just part of the business. And so it's really, really important you do so and you provide those financial reviews, but it can be yet another opportunity in regards to talking to your money partner and maybe participating in yet another project. Quarterly is the best. You can do it semi-annually and annually. Think about it a little bit differently. Don't think about it as work. Think about it as yet another opportunity where, again, you guys can collaborate and have hopefully another successful venture together. Okay. So that's the way you guys should all be looking at this. Okay. The other part that you want to also take a look at is you kind of need to be reasonably flexible. Okay. So money partners, I want to be really clear for those that are watching the recording is just like real estate is not a liquid asset. It's not like a stock where you just buy it and then the next day, hey, Mike, you know what? I'm ready to sell the property. And the truth of the matter is the success in this game is not timing the market as it is about time in the market. And so the more time you spend in it, the more success you're going to have. So, your real estate expert has put together a plan or a strategy that probably is going to have some timeline associated with this. So try to stay committed to what the plan is, especially if your real estate expert is trying to do their part to make sure they're executing accordingly. It may be requiring, finding new tenants or maybe some renovations, or we're trying to turn over the entire building or whatever the situation is, whatever the strategy is, making sure that you as a money partner are committed to the deal, knowing that, hey, you know what, this is not as liquid as I was hoping to be, knowing that it's not liquid and it can be a little bit of a challenge. Now, understand, real estate experts and also money partners, personal situations happen, things happen. And I think it's really, really important for you real estate experts is to always have options because, again, sometimes life just gets in the way. And that's part of the challenge that sometimes happens. Okay. So personal situations happen. Somebody loses their job or, somebody unfortunate, maybe somebody is in the middle of a divorce or passes away, God forbid. But be understanding that at some point in time, if a personal scenario or situation does happen, you may have to make some adjustments. And so my recommendation there is you always want to be raising capital, no matter what, where you may be able to substitute a potential joint venture partner if you ever need to. Okay. So you do need to be somewhat understanding. Again, open dialogue for you money partners. Understand that personal situation may be something personal and respectably so. But again, this is not a liquid situation. Okay. But at the end of the day, there may be other situations that tend to happen as well. And it may be a conflict within the joint venture relationship as well between the two parties. And so with that being said, a joint venture agreement should kind of cover a lot of those things off. So with personal situations and possible conflict, which we'll talk a little bit more about, again, that's where your joint venture agreement comes in. It should cover off a lot of those bases. And this is why it's so important to talk to your lawyer, make sure it's drafted up appropriately to making sure that it's solid in case of worst case scenarios. Okay. So in addition to that, we may also have a plan. We may say that we're going to hold this for 5 years, but something changes. Okay. So there might be some market changes. Guess what? Something changed today. It was a big change. I'm going to tell you right now, it's going to impact, and I'm sure people are crying, they're upset, and some are ecstatic in some cases because it might be opportunities. So with that being said, this was a big change, big announcement. And unfortunately, there's going to be more to come in the horizon. So with that being said, you as a real estate expert need to understand these surprises may happen. It may not be fitting what the budget is. There might be a surprise expense that pops out where I'm not able to pay you, money partner, and myself as a real estate expert cash flow for that quarter. We may need to build on the reserve funds, and that happens too. And so that's part of the dialogue as a real estate expert and money partner you do need to have and say, be honest. You know what? Our reserve funds are a little bit tight. I want to pay out cash flow, Mr. Money Partner, but unfortunately, I had to use that cash flow and keep it within our account to maintain our reserve funds. And this is probably one of the bigger messages I want to share. Protect your reserves because you just never know when emergency situations happen. Don't continuously pay out cash flow when the property is not performing. Make sure that you are in a good positive position before you start dispersing out cash flow checks. This way you're protecting yourself, you're protecting the property, and preventing a situation for a potential cash call. And again, cash calls don't necessarily need to be a negative thing. Things happen sometimes, okay? Things just happen. But at the end of the day, you want to try to mitigate that to the best of your ability. One of the things I teach and preach is having reserves is extremely important, extremely valuable. And so making sure that you maintain that. And then you look at today's environment today with everything that's going on with inflationary periods and also with rate increases. Again, some people are going to be in a little bit of a stuck situation. That's why I'm sharing that with you guys and sharing it based on some of the experience that I have. Okay. So those are some of the key things. Stay committed, be flexible, understand things tend to happen. How are you dealing with those types of things? Okay. So in addition to this one tends to happen from time to time, and hopefully it doesn't. Okay. But dealing with problems. Okay. So first and foremost, make sure everybody understands their roles. So money partners, all of the management side should really be on the real estate experts aspect. It's not that you can't provide feedback, but at the end of the day, that is the role of the real estate expert. Okay. So just make sure that the roles are fully understood between both sides. So there's no conflict going in between where maybe the money partners found a tenant for the property that's currently vacant, but hasn't done any due diligence or screening. That could be a problem because it's going against a lot of the policies and the way the systems work for the real estate expert. So just understand those roles. Make sure they're crystal clear where everybody deals with this. So there's no confusion yet again. And this is a great way to mitigate any problems by understanding that. And if there's something that pops up, then you can have that dialogue and say, that's not your role, Mike. So just understand you need to take a step back because that's my responsibility. Okay. Now I want to also be clear, problems can occur and sometimes they do. And it's not the problem that is the issue. It's how you actually react to them. And that is extremely key. It's just about being focused on the issue. And more importantly, it's not about It's about how you kind of address this and deal with this. There may be a surprise expense that tends to hit, Mr. Real Estate Expert, and you're like, you know what, I don't really want to share this with my money partner, and it's maybe making you feel like you are not doing a good job. Sometimes these things happen, but the biggest mistake, I've been doing this way too long, over 20 years, but the biggest mistake I see real estate experts do is they bury their head in the sand. And the important thing is, when a situation happens, don't just try to avoid it, hit it absolutely head on. Okay. And what, it could be multiple different things. You may have a tenant that may have absolutely destroyed your unit, and you're like, oh my gosh. And now, maybe the reserves are not very well. And like, how do you communicate this back to your money partner that we need to do a cash call of $20,000? The best way to do it is hit it head on and be open with your communication. Okay. If you continue to hide it and hide it and hide it, and then all of a sudden it rears its ugly head later on, which it will, then what's going to happen is it'll be a surprise to your money partner, and that trusting relationship is probably going to dissipate a little bit, okay? Because they've entrusted you that you're going to communicate with them. We just had a quarterly review, Mike. Why didn't you tell me about this already, right? And I've seen people hold things up or hide these things for years in some cases, and all of a sudden it just rears its ugly head, and it can be a real awkward situation, okay? And here's the advice. Communication between both parties is extremely important. You guys are going into this together equally. Things happen sometimes. And so the important part is be able to talk it out openly, have some dialogue, and making sure you engage and making sure we're working together for solutions to help provide answers to the problem. That's the key. Now, your joint venture agreement that is signed will cover off things like this, but I'm going to be also highlighting, you don't really want to use your joint venture agreement you want to use your joint venture agreement as a last resort, because it's kind of a little awkward. It's just like, you know what, if we can't get into a position of talking it out, it's like referencing, what is the joint venture agreement signed? But the reason why we're referencing the joint venture agreement is because we're not agreeing. We're not able to talk this out. And so again, referencing a joint venture agreement should be kind of that whole last resort. And I'm hoping that you guys are able to dialogue in advance and talk about it versus referencing, well, that's not what the joint venture agreement says. Talk these things out. And that's the best way to deal with it. And problems may or may not happen. Best thing to handle is just communication. Extremely key. And you'll have a lot more success with your relationship with your money partner. Okay. In addition to that, this is the last thing, last few slides I've got here for everybody. It is, you guys started this, or we started this whole series based on what you were selling and understanding the role of the money partner and what they're looking for, and also the real estate expert, what they're looking for. And again, we're trying to build this constant trusting relationship. And we've been sold on this right from the very beginning. And as I shared earlier, the trusting relationship does not end. It just further gets enhanced. And what happens is our real estate experts, following through with your commitments, hopefully accomplishing the goals that you've set and that you've laid out with your money partners. That's building trust. Even constant communication, that's an extremely key piece. Sometimes the goods, the bads, the uglies. And sometimes I've had to share some bad news with some of my money partners as well. But because we've been very open in dialogue, it's building trust that we're having this discussion. But more importantly, I'm trying to find answers, or I'm providing answers and solutions that we can go over with our money partners to making sure we're overcoming this. But that's the key. We're here working together with the same common objective. Things tend to happen from time to time, but more importantly, it is this constant trusting relationship that we're building. So the more communications you provide, the more detail you provide, it's going to ensure that you have a very, very successful relationship. And the other aspect to this is we remember kind of why we are doing this to begin with. The real estate expert may not have any capital. The money partner does not have any experience. And together we're combining our resources to do this transaction. And so with that being said, I kind of like to leave this always kind of with a quote. And alone we can do so very little, but together we can do so much. And we've talked about this in depth. It's just like, if you really want to grow, if you're really wanting to scale, the most successful real estate investors that are out there, they're doing this by working with other individuals, money partners, real estate experts. And by doing this together, they're seeing themselves be so much more successful and being able to grow. And that's what this whole series is all about. There's going to be one person that has one thing, the other person doesn't have the other. But by collaborating and coming together, it's amazing what can be accomplished by working closely together. Understanding what their goals and responsibilities are, and more importantly, what are those objectives that you're trying to accomplish, to finding the right partner for yourself for the long term. Okay. So as we kind of conclude the more training aspect of this series, I'm just going to wrap this up as we kind of summarize this, is understand why you need a joint venture. What's the reason for this? And what are the pros and cons? Are you comfortable with the pros and cons that come along with this? And so everybody understands the rules of engagement. And again, are you comfortable with this? Okay. Joint venture partners are literally everywhere. And as I shared before, make all your discussions a real estate investing discussion. And with that being said, it's just there is millions and millions, if not billions of dollars out there. You just got to go out there and find them. Okay. And what you're looking for is finding partners with common goals, compatibilities, and more importantly, it's just this willingness to work together because you have the confidence in each other to proceed forward. Okay. Everybody should understand the structure of the joint venture and make sure that they are happy with this. You don't want to go into a partnership where that is not clear. That's going to be problems for quite some time. Okay. And I've seen that multiple times because they've not had that dialogue. Okay. So the partnerships begin at the acquisition, and also at and expectations. Okay. So you begin once that property has been acquired. Now the partnership has truly begun. And so all of those things that you have for your expectations and everything, that is now in place. Okay. So you want to make sure that your expectations are being met and everybody understands. But really, your work, real estate expert, starts upon the acquisition side. Once it's done, you get to work. Okay. At the end of the day, together, everybody achieves more. And, for myself, even, there is absolutely no way I'd be where I'm at based on my portfolio without raising capital. And so, like I said, it's been a huge success for me, and I've been very, very fortunate in that position. And like I said, it's one of those things that if you are truly wanting to grow and scale your business, partnerships are really one of the best strategies. Okay. So with that being said, we're kind of wrapping up this part of the training session, but I do want to talk a little bit about kind of support. And, with all these economic pressures and things that are happening out there, and it's kind of interesting because we're talking about capital raise and we're hearing all this negativity, and you hear the old saying, be fearful when others are greedy, and greedy when others are fearful. And it's kind of very interesting times. And, right now people are fearful, but at the same time, truly believe. And again, this is my feeling on this thing. There's going to be some unbelievable opportunities for buyers out there in the very near future. And again, cash is going to be extremely key. Cash is going to be king in this. So if you've ever wanted to truly scale your business, this situation that we're dealing with right now could be a possible opportunity of a lifetime in some cases. We don't know what's going to happen. But at the end of the day, you look at what happened in the 2008 recession, and I'll ask this as a question to everybody. If you know what you knew today, if you know what you know today based on 2008, would you have bought more properties back then? I can guarantee you, for me, absolutely. Goes without saying. So it's all about getting yourself prepared. And are you prepared for those potential opportunities for the future? Okay. So that's the question, for yourselves that have been paying attention and been watching the series, and thank you for participating. Are you guys ready to jump in on those opportunities if they become available? Because like I said, it's going to be very interesting to see in the next few months. And right now, even myself, we're definitely in a cash position. The question is, are you guys ready? Do you guys have capital ready to present and get going in case that opportunity presents themselves? Okay. So with that being said, that's one of the things I wanted to kind of share with you to kind of wrap up this series. Is we do have something called Elevate Masterclass, and we're very, very excited about this. And so this is a segment that we've done for years, especially with Savvy Investor. And we are currently in the middle of this, but in the next couple of weeks, we are about to launch our raising capital through joint venture partnerships. So we get into significant more depth than what we did in our series. So for those that are maybe wanting some more guidance and more assistance to really scale their business, we are offering this last few spots because in the next couple of weeks, we will be going forward with this. Okay. So these are kind of our three segments in our training programs. We talk about fundamentals to residential real estate investing. This is an 8-week program. Raising capital through joint venture partnerships, which is 10 weeks. And then our most popular one, multifamily investing, which is extremely popular and rightfully so, especially with everything that's kind of going on right now. Multifamily, in my opinion, is going to be an absolute home run because as properties are not being able to be purchased and it's becoming less and less affordable to own, people will be renters for a longer period of time. And in the multifamily space, it's going to be a great business. So this one here, we are literally wrapping up in the next 2 weeks, which is our fundamentals to residential real estate investing course. So with that being said, we're just concluding that. But the reason why we wanted to kind of share this is in the next 2 weeks, I've got 3 remaining spots left in the raising capital through joint venture partnerships. And again, you've just kind of had a small taste over the last 4 days, but this is actually a 10-week program. And I know the numbers I know this might be a little bit tough to see, but we'll talk more about this in a second. But it really goes down into significant detail. 10-week live training program. It is 3 hours every session. We get right into the nuts and bolts. How to raise, foundations to raising capital through joint venture partnerships. We talk about securities commission. We talk about the right strategy for a joint venture partnership and the benefits and pros and cons that come along with this, but we get into much more depth about it. How to attract capital to your investment deal. And I want to be very clear. It's not pitching your deal. It's how do we attract people to you? How do we constantly attract those individuals? And that's really what we're talking about is how to attract people. Marketing strategies. A lot of people use social media and it's such a big component, but I want to be clear. It's not about pitching the deal. Like we talked about it. I see this constantly. People are not there to buy your deals. How do I present myself as somebody that they want to work with? And that's what we spend a lot of time with, how to structure this, how to properly market yourself so you can attract the money for yourself. How to screen potential joint venture partners for compatibility from a real estate perspective and a money partner's perspective. So how do you do that? Okay. And so those are things that we're going to be highlighting. Joint venture structures and legalities. We have our corporate lawyer joining us as well to talk about the right structures. The best part about it is you get a copy of a letter of intent that as you shared about as well. You also get 2 copies of legal joint venture agreements, which you get access to. Each one of those are about over $2,000. And then again, financing and protecting your interest. That's a big component of it as well. Joint banks don't normally like joint ventures. So how do we present accordingly? Managing your real estate business. And week number 10, it says number 8, because there's 2 weeks of additional training that comes in practicing your presentation. That's what our course is. It's all about how do we present and practice this over and over and over again. So when you do this, at the very end of this program, you'll have all the confidence to raise capital without a doubt. I love getting messages from my students saying, I just raised $500,000. I had one of my students just raise $750,000 just last week. I was very, very excited for them, but they are doing it and they're kicking some butt. But at the end of the day, this is a very hands-on program. And at the very end, there is live one-on-one presentations as their kind of graduation or their final exam, where they're actually presenting with their fellow colleagues, recorded, and everyone has to do this. And more importantly, is over the 10-week period, you're getting lots of practice to make sure that you are presenting extremely effectively, okay? And practice is extremely key, exactly, Cheryl. And this is where we spend a ton of focus on there. You're being forced to do this. I hate to say this, but this is the only way we're going to learn how to raise money. But I can guarantee you, if you're feeling like you lack the confidence or you don't necessarily feel like you have the right structure to present and find those partners, there is no way you will not have that confidence at the end of the program. It's just not going to happen. I promise you that. You will know all the steps, all the systems, everything, and you'll have all the right tools to present. The other parts that we talked about is managing your real estate business. We touched on it. You will actually get the documentations for your semi-annual reviews and your semi-annual or quarterly reviews, as well as your annual reviews. So we provide you all the tools to help support that. So these are some of the things that you'll get. Number one, you get a CRM, so a joint venture prospect database, marketing tracker as well, so tracking your marketing side. We've provided you with a new client package. So these are the things that need to be completed when you're presenting to a new client. The big one is the questionnaire, and that's a huge one. It's in regards to screening your money partners. And so we spent a lot of time talking about this. Joint venture presentation. I joked around about having a 30 to 40 page binder that I presented. My presentation now is 1 page. That's it. That's all the money partner gets. That's it. So again, it's all about building that relationship and building trust. And by doing the 1 page presentation, you'll see how crystal clear you will be in your pitch, and more importantly, having and building that confidence with your money partner. Property pro forma template. So what your budget needs to look like. How do you present to qualified partners? And so you'll get those tools as well. Joint venture agreements. There's 2 templates that come. And then again, like I said before, you'll be getting your annual review and quarterly review templates as well. So that's the raising capital through joint venture program. I have got 3 spots left for that, and we only take 15 students, which I'll talk about in a second. But at the end of the day, that's all we have. We only take 15 people at a time, and we try to do that purposely, which I'll share with you shortly. Now, after that 10-week period, for those that are interested and are really wanting to take it to the next level, we also have our multifamily course as well. And our multifamily course is our most popular. And the multifamily course is all about multifamily investing. And you cannot invest, you can't put your residential real estate investing hat on when you're trying to buy multifamily investing. You need to take your residential investing hat off, throw it away, and now put on your multifamily investing hat. The multifamily is a completely different animal altogether. You are buying a business. You are not buying residential property. And so it is treated so differently. It's been interesting. The last couple of years, I've seen a lot of residential investors buying multifamily with the same mindset as residential, the residential analysis, and they're buying it in that fashion. Unfortunately, that's not the way to do it. And unfortunately, there's probably going to be some pain in the future for them as well. So we really get into the nuts and bolts in regards to understanding what multifamily is all about, how to build the right plan, identifying key markets nationally based on due diligence. What's happening right now is going to be so interesting over the next 6 months. This course is going to be starting in September. So I'm really looking forward to teaching this, because there's going to be some really unique things that are going to pop out of this over the next few months based on analysis. Okay. Corporate structure, how to set this up properly, especially with joint ventures. A lot of people take the joint venturing course to begin with and then move into multifamily. And so they can take a lot of the tools from residential, take a lot of the tools from the joint venturing course. They can apply it to residential, and they can apply it to multifamily. And now they got the best of both worlds, because they can look at multiple different types of product and inventory, right? So they can look in 2 different strategy, a plethora of new inventory versus just single family. Analyzing a multifamily, very different as well. So it's about how to properly analyze this, calculating cap rates, multipliers, income strategies, all that wonderful stuff. The big piece that we spend some time with is making the offer. So there's some really good tricks and tools that I've helped provide to make sure they're minimizing risks. How to do due diligence, how to assess a property, ensure that how to assess the property before removing conditions. So the purchase process is significantly longer. It can take 3 to 6 months to close. And again, this is why it's so different than residential. So do you understand those parameters? Financing as well, financing the deal. It's a whole different animal altogether, much different. So how do we present to the banks to make this effective? Closing the deal, understanding closing costs. So again, very expensive. You need a lot of money to make this happen, which is why a lot of people take the raising capital program first before they do this, because they may not have $500,000 or $1 million. So they've learned how to raise money to facilitate this. And then last but not least is acquiring a multifamily is easy. but you are looking to expand, you're looking to grow. The reason why multifamily is such an interesting piece right now is the rental market is probably going to expand. There's going to be a lot more demand for rentals because it becomes less affordable. So now rents are most likely going to go up, and it's going to be a real appeal as well. And so that can help increase the valuation of your building as well. Okay. So a lot of great tools, market due diligence template. This is huge. Multifamily property analyzer, again, how to calculate cap rates, multipliers. And this is a much different template than you would get in the residential program. And again, it's calculating things differently. Multifamily comparable analysis template. And this is huge when it comes to negotiation. And I think this is one of the only things that only templates that I've seen in the industry, based on what I've seen, is how to really truly look at market comparables in multifamily. It's very, very different. Okay. Property purchase agreements. So we provide you really great tips on how to write the offer, structure it properly. Seller financing agreements as well. So again, we provide you a great template to help finance that. Acquisition tracker checklist. So you get this checklist because there's lots of things going on when it comes to multifamily. Due diligence analysis, again, how to conduct due diligence and making sure everything's working, and how to present it in the pro forma accurately, because you're going to present this to your money partners. Again, property financials. So we're going to teach you how to kind of do your own books and how to track the property's performance. So even when we talked about performance today on the raising capital side, we're going to give you those tools to make sure that you use that to be very, very effective when you're tracking the performance of the property. And of course, last but not least, is just the preventive maintenance checklist as well. So constantly maintaining to ensure that the property is being maintained accordingly, because it will impact the value of your property. Okay, so here's kind of the costs associated with the property. As I said, this course here is done. We're done in 2 weeks. The one that we've got coming up is the Raising Capital Through Joint Venture Partnership. So this is going to be starting up on July the 28th at 4 p.m. Pacific Standard Time, and it's every Thursday for 10 weeks, okay? So this is kind of where we're at. In addition, we've also got our multifamily course, which starts on September the 29th. And that is an 8-week program. Okay. So with that being said, if you are looking to take one course, this is the one course here at $3,495. And if you are looking at taking the 2 courses, then you are looking at $6,590. We reduce the price based on quantity. Obviously, the fundamental course, we have students that are taking all 3. But with this being said, that's the price for the 2 programs itself. And I'll talk more about the payment plan in a second, because we know it is expensive. But at the end of the day, you'll understand why in a second. Okay. So with that being said, there is huge differences between different programs. And so, and I built these programs based on the way I've learned. Okay. And so in some courses, they're done over a weekend or a 2 or 3 day affair. And I just find that it's really difficult, because sometimes it just goes in one out and out the other, and you can't really, it's too difficult to comprehend and keep all that information together in such a short period of time, which is why we've stretched it out over an 8 to 10 week period. And all of our programs are very hands-on. It is nothing, it's not listening to Mike Ponte for 3 hours straight. It's a very hands-on approach to this, to making sure that you get it. And so you'll be heavily involved. For people that are taking a multifamily course, you're going to pick an investment town. You're going to find a realtor. You're going to find a property manager. They're going to send you deals. You're going to analyze deals based on the information that you are presenting. And at the end of the course, you're going to be presenting to your fellow colleagues about what type of multifamily properties look like in the market that you've chosen. So those are some of the things that we talk about. You'll have real investment tools. These are tools that I use in my business that you will get access to. Best of all, you get one-on-one guidance with myself. So the reason why we keep our classes very, very small is for one reason alone, is to ensure that I always have adequate time for my students. So if you've got questions throughout the weeks, I am absolutely available to you guys to make sure that I get your questions answered, so you get it. And then more importantly, that you can execute that out into the trade. Okay. After program support, sometimes other programs charge you for a mentor cost or whatever the case may be. I don't believe in that too much. Like my expectation is, if one of my students have taken one of my courses and they're about to buy their very first multifamily deal or about to raise their first $100,000, I am absolutely expecting a phone call to making sure that everything's buttoned down and it's clear. And more importantly, that they've making the right decisions and following it through, because I want my students to be successful. I don't want students to be associated with myself without success. And I take a lot of pride in that. And I want you guys to all kill it out there. Okay. You will get access to real investment opportunities. And I want to be clear, this isn't investment opportunities that I'm bringing to the table. It's actually deals you are bringing to the table. So you are presenting this, you are bringing it, and you'll be able to analyze this all on your own. Okay. So you'll be able to see all of this stuff. Okay. So with that being said, that's kind of really some of the details for that. In addition, we keep our student, again, it's very, very small, 15 students max. We try to keep it as compact as we possibly can because it's a better learning environment. It's hard to be able to communicate with my students if I have 100 plus. But again, the more compact, the better experience our students have, and a better learning experience they have. Program price, again, if you're taking the one course, it's $3,495. I've seen weekend courses for $12,000, which is a little aggressive, but at the end of the day, each their own. So it is stretched out. You get a better learning experience. You get a lot of attention. And more importantly, we want you guys to be successful. Okay. So a lot of testimonials for those of you that have been on Savvy Investor for a long time. You'll see our graduates. And more importantly, you just see them killing it. And we take a lot of pride in that. It's not because of me. I provide the assistance and support, but it's them that are actually doing it. And that's what I look for my students. I do not want people to be making an investment and not getting a return on it. So again, that's the course. And let me kind of talk about the payment plan. So for those that are interested in maybe taking the two programs, we do have a payment plan where we break it up into 3 payments, and it's 1 payment every 3 weeks. So you guys will have access to all of that stuff. So you will also be able to get access to the recording. So every session is recorded. You will actually get access to our Savvy Investor website and our portal in the back of the house, which you have all the recordings, all the resources of these courses. And here's the thing, you get it indefinitely. Okay. Once you've taken it, it's always available to you. So you can take the program over and over and over again, or you can reinforce it just by watching some of the, so you'll always get access to the resources. You get always access to the material. So if you want to revisit the multifamily course, you can go ahead and proceed at any point in time. You've paid for the course, that is yours. And so it is all back of the house. It's a great platform in the back of the house for us on the Savvy Investor website. And so it's a great tool. So you can have access to the training in advance. And in addition, before the live training starts, but that's some of the tools that we've provided you. Okay. In addition to that, we have such confidence in our programs, like truly we do. And to put kind of our money where our mouth is, we've also kind of provided a money back guarantee. So here's a money back guarantee. If you don't make at least your tuition back, okay, to be very clear, if you don't make your tuition back on your very first deal, okay, we'll give you your money back. Period. Okay. But you have to follow the tools and the principles that we have taught you. But if you don't make your money back based on your first deal, there's no question that we'll give you your money back. Okay. So if you guys are serious, and that's what we're looking for, is we're not looking for students that are just looking to continue to educate but not do anything. We're looking for students to go out, they make their investment in themselves and get their return on investment by actually going out there and killing it. In a lot of cases, this is like getting your tuition. This is like getting your course for free. Okay. Seriously. If you're serious, this is like getting your course for free. Okay. So that's your money back guarantee on this. Okay. So, and I'm very committed to this. We've never paid this out ever. Okay. And that's how confident I am. But there is it's impossible from my perspective. If you're serious about investing, there's no way you'll not get at least your tuition back on your first deal. Okay. So if you're serious, love to have you on. So this is what we've got. We have got 3 remaining spots for raising capital. I've got 2 spots for multifamily investing. Here's the thing. The people that are watching the live training, you guys are getting first dibs because this is being promoted on Savvy Investor tomorrow. So and it is a first come, first serve basis. And I'm going to tell you right now, there's no question this will be sold out probably by Friday. So it is first come, first serve. So for those that are interested and wanting to partake, here's the way to do so. Okay. So go to our website, and it's called thesavvyinvestor.ca. So let me just pop this up for everybody can kind of see this. So that is the website. Go to thesavvyinvestor.ca. And our program is called Elevate Academy. And we've got our 3 programs: Elevate Masterclass. We got our mastermind group, which is Elevate Mastermind. But what I'm talking about today is Elevate Masterclass. So you go to Elevate Academy, which is our main training platform. And under Elevate Masterclass, you will be able to read up on all of the things that we highlighted today on our training session. And if you are interested in partaking, my recommendation is click on the discovery or a discovery call section and fill it out, and we will set up a discovery call. So I want to be very clear. You may have questions, and more importantly, I want to ask you questions to make sure it's the right fit for you. So please go ahead, fill out the discovery call session for you. We'll set up a call, make sure we get your questions answered before we finalize your registration. But the key reason why I'm saying is if this is something of an interest to you and you don't necessarily know, set up the discovery call first and foremost. And once you do so, it puts your name in the queue and you've protected yourself in your spot because we've only got a few spots left. Okay. Again, we are looking for serious individuals that are really wanting to make this happen. So if this is you, then this is something that we are interested in working with you at. Okay. So with that being said, that's kind of our website. That's what we're looking for. And if this is something that is really of an interest to you with Elevate Masterclass, we've only got a few spots left. But at the end of the day, we want to make sure that you are serious about your education, and we want to support you to really kick some you-know-what in the back end. So set up that discovery call. Let's set up that discussion and make sure that this is the right fit for you to proceed. Okay. So with that being said, we are going to wrap up tonight's session. And I want to thank everybody that's been able to join us, not just for today, but all 4 days. So thank you so much for partaking in this. And I hope you guys found value in this. As we are kind of concluding today's session, I do want to thank you guys all for your continuous support. You guys have been amazing through Savvy Investor, through our YouTube channel as well. But I will throw this out there one last time. If you haven't had a moment to subscribe to our YouTube channel, please do me a small little favor and give us a like, give us a thumbs up, and ring that notification bell. So whenever we've got new videos loaded up, you'll be notified as well. Okay. So thanks again. And again, if you haven't watched any of the previously recorded sessions, just make sure you check out our YouTube channel and everything will be there. Thanks again, everybody. Have a wonderful evening, and we look forward to seeing you guys at our next training session. Have a wonderful evening. Bye now.